How's everyone doing? My name is Jorge Contreras, and today I want to share with you a little bit of philosophy that could be beneficial for you if you have ever or are interested in being an entrepreneur. So this is a philosophy created by Robert Kiyosaki, author of the #1 finance book of all time, one of my favorite books, Rich Dad Poor Dad. So Robert Kiyosaki talks about the cash flow quadrant and the four types of people that make up the world. So we have the employee, the self-employed, the business owner, and the investor. They all pay a different amount, a different percentage of taxes. Now, if you ask anyone who pays more taxes, the left side of the quadrant, which is the employee, self-employed, or the right side, which is the business owner and investor, most people would actually say that the right side pays more taxes because they make more money. However, the tax laws are actually written in favor of business owners and investors. So, just so you get an idea, the employee pays about 40%, and again, this is taking into accountability state, federal, Social Security, Medicare, and so many other things, right? So the employee pays about 40% of their income in taxes. The self-employed about 60% because they have the same expenses as an employee and a business owner, except they don't have the tax write-offs or deductions that a business owner does. The business owner pays about 20% and the investor pays 0. And so I want to give you an example of how the tax structure actually works. So let's just say you make $100,000 as an employee or self-employed, as an example. Well, before, and if you're an employee or you ever were, you know that before you even get your money, the IRS already actually deducts your taxes. So on the left side of the quadrant, let's just say you're making $100,000, just to work with an easy number. As an employee or self-employed, your taxes are taken away before you even get your paycheck. Now from here to about here, you have your everyday expenses that you just need on daily to just survive, right? So you need groceries, you need gasoline for your car, you pay your rent, you got insurance, utilities, all these expenses, right? Get your hair done, buy clothing, all those things, buy shoes. And then you're left with so again, they take away the taxes. From here to here, you have those things that you need to buy regardless of where you are on the cash flow quadrant. And then you're left with about this much. The benefit of being an entrepreneur and being on the right side of the quadrant as a business owner and investor is you can actually write off the same things here, right? So as an example, because I'm a business owner, I'm able to write off my gas, my mileage, my clothing, my haircut, my shoes, anything that I buy that is used for my business, I'm able to take those as deductions and write-offs. Therefore, you're able to spend your money as a business owner and investor, and you don't pay, for example, for 2016, you won't pay your taxes until 2017, which is actually a great and free short-term loan, right? So you're able to write off and take advantage of all these tax deductions, and then you pay taxes on whatever is left. So again, just a quick recap. This is the Cash Flow Quadrant by Robert Kiyosaki, author of the #1 finance book of all time, Rich Dad Poor Dad. You got the employee, self-employed, the business owner, and investor. So hope you enjoyed this video. Thanks for watching. So again, thanks for watching this video. I hope you enjoyed.